How much of a pullback we're gonna have before continuing our way up with Bitcoin? Do we still have time for a bull run? And why I think that tokenized equity is actually a bad idea for Bitcoin. This and much more we are going to discuss in the video today, guys. Welcome to Bitcoin Predator. Let's get started. So let's have a macro idea of where we are with Bitcoin when it comes to the price action and the chart. So right here, I try to split between the 4-year cycle of 1 year of bear running and then 3 years of bull run. And then this is the first question that we're gonna ask is, do we still have time for a bull run? Can we still consider some sort of margin of time until we start the next bear market? So if you take a look back right here, guys, in retrospect, the first bear market on around December 18, according to this chart, of course, we had previous bear markets, but from the one that I got here, we got around 357 days of bear market. And in this bear market of 2027, it started on December 2017. And then if you take a look again, guys, right here, later on, before the next bear market, the previous all-time high took place on November 21. And the third year of that bull run in particular took around 364 days. Now zooming in for today, right now we are on 238 days of bull run. So if you take a look back, at least from the two previous bull runs, there were at least 350 days. So based on the duration, I can still say that we have a lot of room. We have at least 100 days until the next bear market to start. So good news. And if we take into consideration that the previous last bull runs of the 30 years took place around November and December of that particular year, we are still in July. So this means that we have around 6 months for the price to continue its way up. You might ask, okay, but how further will the price go up? If you have been following this channel for long enough, you know that this kind of question, in my opinion, is a big trap. There are many things that you can do instead that are way better for your trading and for your risk management. If you want to know more about that, check out this video about price prediction, why this is a trap. And if we zoom into the weekly time frame, we can clearly confirm that we are still on an uptrend, perhaps a higher high, we just got a higher low, and then probably we're gonna have a higher high pretty soon. But if you notice, guys, we had 1, 2, 3, 4 weeks of a downtrend. Then suddenly we had 1 week that engulfed these 4 weeks. This is extremely bullish. We had a clear fair value gap that was already filled from the last 2 weeks, but we can still find a couple of opportunities on the daily time frame. When we zoom into the daily time frame, the first thing that is going to stand out is the fact that we already had a 60-day cycle low on June 22nd. This means that until the next 60 days of the next 60-day cycle low, we have to take into account the right translation of the uptrend, which is going to take around the end of July. This can even be confirmed from the RSI VWAP indicator, in which we had a quite close touch to the upper band of around 78, and then the price started to go down, perhaps getting momentum to continue its way up. Because remember, if we are on an uptrend, the price will not go as further as the lower band. Sometimes as we have seen several times, the price may get as further as the 50 level and then continue the bull run. And from my Predator oscillator, just like I said, once the price broke the momentum line, it is currently retesting the momentum line before continuing its way up to the upper band. Now, on the daily time frame, when we're looking for order blocks and fair value gaps, I can clearly see a daily fair value gap right here between the 104,600 and 103,400. Although the price got a little pullback before that, but it quickly became bullish on the following days. So I still believe the price will go down as further as this level and even maybe a little bit more in order to get some liquidity sweep before continuing its way up. Now, when we zoom into the 4-hour time frame, we can see a couple of points of interest. First of all, on around June 23, June 22, we got this big push to the upside, breaking this current swing high and confirming the change of structure. And I say this was a change of structure with clear strength because we had a lot of volume to make this change happen. After that, we got some retail activity that pushed the price a little bit further, but then came back down. And now, right at the beginning of July, we had another break of structure right here on the 108,700 level with, again, significant volume, but then the price is coming back down and consolidating for the weekend. Pretty much retail activity right now. But here's the thing. We can see that this 4-hour order block right here might be considered a good opportunity of entry. However, when I look at the liquidity heat map, I can see some big volume being formed at around 105 and 104,000 level. So this is why I strongly believe that the price will get to this level of the 106, maybe retest, continue its way down to the daily fair value gap on the level of 104,700 and 103,500. I dare to say that we might even have some liquidity sweep on the 102, and then we definitely continue its way up for the next uptrend and new all-time high, which gives us a little bit more time for the next cycle high, but still we are quite short on the margin of time in order to get this new cycle high, because from the 60-day cycle perspective, we're still gonna have the next all-time high or the new cycle high after the end of July, which is going to be a period that probably Bitcoin is going to consolidate a little bit, and then we're going to have some cycle low on the beginning to mid of August. I know that we cannot take the M2 global liquidity with an offset with 100% accuracy. This is just so we can have an overall idea of where the Bitcoin price is going to be in a couple of days. And remember, previously the Bitcoin price started to deviate from the M2 global liquidity at around 6 months before the trend continuation of the M2 global liquidity. So this is just a heads up for us in order to keep our eyes open. But nevertheless, if you still consider this to be the third year of the bull run, I still think the M2 global liquidity is giving a nice confluence of correlation to Bitcoin. In addition to that is the fact that probably the DXY is going to be a little bit up before continuing its way down, as how the dollar is currently behaving across the market. If you take the S&P 500 overall, we're still going to have some bullish bias going on over the next few days. However, I do not think this trend is going to continue forever. I think we're going to have some sort of resistance, maybe some choppiness, and continuing its way up. And this is even better because, like I always said in this channel, Bitcoin price usually goes parabolic when the S&P 500 has a not so good bullish performance. But nevertheless, this means that the market is willing to take more risk, and it means more money inflow for the S&P 500 and for Bitcoin. Talking about money inflow for the Bitcoin, we can take into consideration that the ETFs inflow that we have seen over the last few months has been increasing. But this can be confirmed by the fact that it's not actually ETF or institutional solely, right? Like hedge funds or index funds, for example. You can consider that the money coming from ETFs are actually retail. It makes sense because retail investors or traders put their money on ETFs, and the ETFs takes their money to manage a portfolio containing Bitcoin. But this does not mean that Bitcoin price is going to behave as if there were massive retail trading. Because although the money from retail traders are being poured into ETFs, the way that those institutions apply that margin into the Bitcoin price is not the same as the retail traders. So yeah, in a sense, it doesn't mean that the retail interest is low. Actually, it means that retail interest is high, but nevertheless, the price behavior is going to be different. Because institutions, including ETFs, they trade and put their money into Bitcoin different from retail. There is a whole systematic behind, like a OTC, buying, accumulation from the exchanges, and then eventually a blow-off. If you want to know more how big institutions trade Bitcoin without moving the price, go ahead and check this previous video where I talk about it. Now, moving on to the next topic. We have more government adoption when it comes to Bitcoin, like for example the Big Beautiful Bill. And although Bitcoin and crypto was not specifically talked about in this Big Beautiful Bill, everyone is still optimistic of the overall government adoption. And when it comes to adoption, we also have the tokenized equity, which is going to give everyone the opportunity to trade equities such as stocks as crypto. Although some people might consider this bullish when it comes to the crypto world, I think this is not very bullish for Bitcoin, because it means that we are taking a traditional finance environment and putting them into the crypto world. This may be good for crypto adoption, but for Bitcoin, I don't think so. The reason is really simple. Liquidity is limited. Back in the days when there was only Bitcoin in the market, everyone was trading and investing in Bitcoin. So you could clearly see price spikes and massive returns of Bitcoin. After that, we start to have other cryptocurrency like altcoins, NFTs, so on and so forth. And that made the liquidity to be distributed across the crypto world and out from Bitcoin. So now we're going to have a tokenized equity joining into the game of crypto, which is going to mean that the liquidity coming from traders and investors is going to be split between Bitcoin, altcoins, and now tokenized equity. So I don't like the idea of tokenized equity. I think traditional finance has its world on Wall Street, and that's okay. But I think that Bitcoin should still remain as the major asset in the crypto world. And we have also some news that we are not very sure if they can be considered bullish or bearish. Like for example, someone took 10,000 Bitcoin out of dormant wallets recently. So we are not very sure what's going to be the next move of this wallet user. Was this a hack? Is he or she going to sell those Bitcoin? Or is just storing on cold wallets? We don't know. But nevertheless, I think that shows how powerful buying and holding Bitcoin actually is. I'm not a holder personally, but from that you can clearly see that that guy started with $7,800 worth of Bitcoin, and after just 14 years he became a multi-billionaire. This is mind-blowing, and also I consider this to be bullish for Bitcoin. Now, since we talked about taking Bitcoin out of wallets, we can clearly see that the Bitcoin reserve across all exchanges is actually going down. And yes, I do believe into a supply shock. It's a simple supply and demand rule. While there is still Bitcoin on over the counter, and after that on the exchanges, eventually the Bitcoin from the exchanges are going to dry up. And when that happens, the price is going to spike. Interestingly enough, although we are only around 5 to 8% away from the next all-time high, the Fear and Greed Index is stuck on the 50 level, neutral level. So I still think we're going to go down a little bit before continuing to the next greed and extreme greed. And the greed is going to come back as soon as the Bitcoin price reach new all-time high. And from the month of August until December, I'm pretty sure that we are going to trade in a range of neutral, greed, extreme greed, neutral, greed, extreme greed, and eventually the start of the bear market. And when it comes to how close are we from the top, the MVRVZ score is still a long way. We haven't even reached the 4th level. We had a couple of spikes, which is good, and I think we are going our way down before getting to the next spike, and who knows, pretty soon to the all-time high and the peak. And I believe Bitcoin is going to play out, and investors and traders are not really willing to wait for a rate cut. Of course, rate cuts will be great, but in the meantime, I still think that we are going on a slight uptrend, because at the beginning of July, everyone was expecting a rate cut in July. The probability was raised for 28 or 30% of rate cuts in July. But after the last speech of Jerome Powell, everyone got their expectations lowered, and the chances of a cut rate in July dropped to 4.7%. Now that gives the Fed more pressure to cut rates, because now on September there is a 66% chance of rate cuts. The Fed is going to have a hard time if we start to get unemployment rate to the upside until reaching the level of 5 or close to 5. I think this is going to be the biggest pressure on the Fed to cut rates. But if we keep steady and maybe to the downside, which is good nevertheless, then you can be pretty sure that the rates are going to take longer to be cut. And when it comes to inflation indicator of the Fed, I still think we're going to be on this range and maybe, who knows, back to the downside. And this is exactly why everyone lost their expectation of a rate cut in July. The jobless claims actually dropped from previous months. This means that the economy is doing fine and the Fed does not have a lot of pressure to cut the rates. But you never know what's going to happen next month and the months after that. Quite personally, I think that if Trump had not raised those tariffs, maybe the rates would have been already cut. This is just my opinion, by the way. And a couple of events to be aware on the next week is, first of all, crude oil inventories, which can be considered a good inflation indicator, and again, jobless claims. But this is pretty much what I have for today, guys. Tell me what you think in the comments. Thanks for watching. See you on the next video.